Good afternoon, good evening, good morning for those that'll be watching in the morning time. This is Comma with Comma Speaks, and today my guest is Ronique Chambers with Executive Touch Accounting. She is a CPA and the founder of this great company, and I thought, what a great person to have, not only because it's tax season, but also she is one of our featured guests at the Entrepreneur Empowerment Conference coming on February 21st. And I know there's many of you that have questions about what to do, how do I save my money, or how do I pay my taxes, whatever the case may be. Hopefully she'll be here to answer as many questions that come to mind, or if you're watching and you want to ask questions, please make sure you do so. Welcome my guest Ronique to the show.
Thank you for having me.
You are very welcome. Okay, why don't you explain to the audience about who you are and about your company?
Yes, my name is Ronique Chambers. I'm the founder of Executive Touch Accounting. It's a small accounting practice in Rancho Cucamonga, California. We do income tax, small business taxes, invoicing, and tax planning for individuals and small businesses again. I started the company in 2008 after working for a public accounting firm, and I've just been working on growing ever since. So far, so good. I'm truly blessed to have the opportunities that I have had, and just by giving a personal touch to each and every one of my clients, I think is the success story that's going on here at Executive Touch.
That is so wonderful. Now, I'm a self-employed realtor, and I know some of us, we don't know what to do, what to save. Should we save this receipt, that receipt?
Yeah.
Now, dealing with someone with self-employment, because the purpose of the show is to help people get into entrepreneurship as well as the event that's coming up. What are some tips or some things that you can let people know that they need to do when saving up through the year for tax time when it comes to receipts and things like that?
Well, receipts, are a good thing to keep. And in today's digital age, utilizing your bank account is definitely the way to keep track of your expenses. As a sole proprietor or independent contractor, if you can, it's always best to set up that business account. And you can simply get your DBA and set that up. And as you use your debit card that's attached to that business account, that's a good way to track your income and expenses. I think that's the best way because receipts, they wear down. So usually within a year, you might have a receipt from January, then by December, you don't even know what that receipt is.
I have plenty of those.
And they are made not to last, so they aren't the best record because of that. So now in the digital age, I think the best practice is utilizing your debit card with a separate account that is just for your business purposes.
Okay. And people, I've heard, and so you can let me know if this is true or not because I'm not the expert. If you go out to lunch with someone and you just talk business, is that something you can write off? So just say you're out with a friend and you just so happen to throw in there, yeah, so I'm selling this. Are you interested? No, and then we can keep it pushing. I know that seemed like a fine line, but what are some, or my question should be, what are some expenses that you can write off if you were to go? Like I'm always going to lunch, going to breakfast, things like that with people for business. Are those some expenses that can be written off?
Yes, it definitely depends on the nature of your business. When it comes to meals and entertainment, and that's the tax category that those expenses are written off on, it really depends on what practice you're into. Like you're in real estate, so that the IRS isn't going to say, okay, Kama is taking someone to lunch. That's far-fetched. So, but if you're a mechanic and you're working, your line of business is working or repairing cars, that meals and entertainment might not be as extensive. They wouldn't expect it to be as extensive for your line of work. So it really depends what you're doing. And yes, if you're vetting a potential client and you're taking them to lunch, that is meals and entertainment. If it's a viable business purpose, then it is 50% of that expense is deductible because there is a 50% limitation on meals and entertainment costs.
Okay, well that's something I didn't know. I thought you can write out off everything, and that's why I have a
Right.
ton of questions.
Yeah.
I thought every penny I could just write off.
That would be nice, and that's why they put that limitation there because they know, if you take, so many clients to lunch over a year, that can get really add up. But, in some lines of work, like I have entertainment clients where they may spend $15,000 in meals and entertainment in a year, and it's not uncommon. So they can write off only $7,000 of that, but that's their networking world.
Okay. And then how about with miles and gas? So if I'm on my way to a meeting, perfect example, today I had a meeting at my board. How does that work? Am I able to, for my real estate board, the association, am I able to write off that mileage? That's not my office. I'm going in there for the meeting. And if I am able to write the mileage, is it true that I can only write it going to the office, but I can't write it off coming, or to a meeting, but I can't write it off coming back?
Right. You can only do it going to, or write off the miles that are incurred going to the meeting because that's the travel. Commuting back and forth from your office is considered a commuting expense. So if you have a home office and you go to meet with a client at their office, that one way is considered a travel expense, but the trip back is you're back to your office. So that's considered a commuting mileage.
Okay. All right. And I'm just trying to think, what are some things that I know people try to write off? They try to write off the farm if they can. What are some businesses, home-based businesses? Let's start there.
Okay.
I know many people that are doing a lot of the multi-level marketing or network marketing companies, and that's one of the pitches that they give them is just to say, you know what, you can write off this as a home-based business. Are those some of the things that you come across? And if so, if somebody is making a lot of money and you see they need some more write-offs, is that something that you tell people to do, is to go either find some kind of home-based business or for them to maybe start their own or something on the side?
Yes, if you have a lot of income and not a lot of write-offs, I mean, there's two strategies, but there's two strategies is a home-based business, but a lot of people try to create a business that runs in the red. So they want to create a business that's losing, so it'll reduce their regular income. And that only works for so often because what will happen is if you're doing a Schedule C business return on your personal income tax and it's calculating a loss for over 3 years, they'll say you're not in business. That's considered a hobby. So they will overrule your business that you do not have a business if you're continually reporting a loss for a specific amount of time. So people really have to watch and be careful with that. It's a myth, really, that you can create a business to run at a loss because as an individual, that only works for so long until the IRS will say, hey, it can't be a business if you're in it not to make money.
And I ran across this guy on Instagram. I don't think he's too happy with me, but he put out there, he said, contact me to find out how I can put you in a lower tax bracket in order for you to save money on your taxes. And I responded to him because I said, well, if you put a client in a lower tax bracket, that means that they can't qualify for even more of a home if they need to, because now you're showing them ways of how to cut their taxes. What are your thoughts on someone actually showing somebody how to pay less in taxes just to put them in a smaller tax bracket? And is that something that you would encourage?
I mean, tinkering around with the tax return to be in a lower tax bracket is always dangerous because the IRS is getting more savvy in ways to detect misrepresentations on tax returns. So the old adage is, if it's too good to be true, it's probably not.
Right.
And especially when you've established a pattern with your income and expenses, the IRS kind of knows, if you're making $80,000 and all of a sudden you're making $25,000 on your income tax return without a significant event changing in your life, then the questions are going to be asked. That's really how audits are triggered, when there are dramatic changes in your income. It may be true, but you just have to be able to substantiate those dramatic changes, because especially in your AGI, that is a red flag for the IRS. That is a audit trigger when your AGI, adjusted gross income, changes dramatically over by 30 to 50%. They automatically flag the return and will ask you questions about, hey, what's going on? Why such the dramatic change?
Oh, wow.
Yeah.
That's something good to know.
A lot of people get caught in that trap and they think, if you can substantiate it, I say fine and dandy. But anytime you can't substantiate it, you're rolling a dice that is definitely more of a headache than what you could gain out of it.
Okay. And if there's anybody watching, for those of you that are watching, actually, you can ask questions on here. So just type your question in. If you're not logged into your Google Plus, it won't go through. So for those that are watching, please, if you have questions, please ask Ronique. She's a CPA. Okay, now I'm a tither. I go to church and I tithe. I believe in tithing. And I don't know or never understood people, we tithe to the church. Is that an expense that is a deduction or can be written off? And is there a difference between deduction and written off? Explain those terms to me, because they may sound simple, but somebody like myself who's not trying to be the CPA may not know.
Right. Well, write-offs in general terms are expenses that lower your taxable income. So what we make is let's say someone makes $80,000, and your write-offs or deductions, they are the same. There are expenses that lower your taxable income, and then there are credits that reduce your tax liability that goes towards your tax payment. Like a popular one is the earned income credit. That overpays your tax bill. That's why you get an increased amount back. So it's a pro bono credit from the IRS if you're lucky enough to be in that situation. So they are interchangeable. They lower your tax liability. Therefore, if you paid certain amount of payments, you get more of your money back if your tax liability is reduced. In the question of tithes, that really depends on if you do a Schedule A. If you report a Schedule A or itemize your expenses on your tax return, then it will decrease your taxable liability. Now, everyone is giving a minimum tax deduction, which is your standard deduction, which is $5,000 something for individuals and then per person. So if your itemized liabilities or itemized expenses exceed your standard deduction, that's why you would file a Schedule A, and that's where your tithes would go. So if you only tithe $2,000 in the year, you would not, and you have no other Schedule A deductions, then you wouldn't file it, and that's why not all tithers, it doesn't help their tax situation, or as far as it doesn't benefit them if they don't tithe over their standard deduction amount.
Okay. And oh my gosh,
But I will add with church. But I will add with church, a lot of people that I see miss is that along with your tithing, you can write off your miles incurred with activities involved in the church. So if you're caravanning or participating in like a Meals on Wheels program or doing any kind of church activity where you're using your vehicle on a regular basis or a normal basis, you can also write off those miles if you file a Schedule A.
Okay. Okay. And again, for those that are watching, please excuse my voice. Something's going on with me, but hopefully I'll be okay. This is not my normal sound. Um, Now, I have a question in regards to, I want to get into business entities. That's something that there's, again, entrepreneurs out there, people that's ready to start their own business, and they just don't know where to start. I had a situation where I had someone that I was going through, and they were charging me, I think, $400 to do my LLC, and that included the formation, the articles of incorporation, my business name to lock it down, my EIN number, and some more things. And I was really upset because, actually, no, they were charging a little over 300. I paid them half, and they told me that there was some stuff that I would have to pay, like $800 fee that the state charges, and wait till I start making money through the LLC. Well, now I'm ready to file. I go back to them, and I realize that to file your LLC is not that much money, and I wasn't that happy with the outcome. I guess I'm venting on here. I shouldn't, but I wasn't too happy. Now, there's people out there like myself. I know I want to file an LLC, and people are trying to determine, well, what if you need a nonprofit, or what if you need some kind of corporation? What determines what you need? And maybe you can give a short synopsis of what the difference is between a nonprofit and an LLC, or LLC and a corporation, so people can understand about the business entities.
Okay. Nonprofit, first of all, it has to do with its business purpose. It is a social need based drive business. So you can't be a nonprofit and a corporation at the same time. You have corporations that are tied to nonprofits, but they're two separate entities. But you can't. Basically, you would be talking about two different business endeavors. So a nonprofit, you have a social-based goal, and that's usually the difference between a for-profit corporation. You're operating to generate a profit, and then with the nonprofit, your income is relied upon grants and public donation and whatnot, and then you receive nonprofit status, which shields you from certain from income and sales tax and most tax structures. But that goes under your social agenda through that business. For profit, it's for profit. Your goal is to generate a profit, and it is taxed as a separate entity. It is a person. They call it an alter ego corporation because the corporation is an entity within itself. It can enter agreements and within its own name. It can be taxed in its own name, and it has shareholders and a board of directors that drive its decisions. In California, an LLC is a limited liability corporation, which it depends on how many members. You can have a single member LLC where you're the sole. It gives you the benefit of having a separate corporate entity and also being a sole proprietor. But in California, what LLC, people who seek to have an LLC should keep in mind is that there is an $800 minimum tax in the state of California for LLCs, regardless of whether you drive a profit or not. The state of California charges $800 per year for LLCs.
Well, just a quick question about that $800. Is that $800 something you pay separate, or if you were to file tax returns and you get money back, they just take it out of that? How does that work?
Well, if you're a single member LLC, like you're the only member of that LLC, you can choose for tax purposes to be treated as a sole proprietor, and that's a way to circumvent the 800. That's the only way to circumvent the $800 minimum tax in California. But you only can have one member in that LLC. Now, if you have more than one member in that LLC, you're required to file a tax return, regardless of profit or not. And if you do get a refund, they will deduct the $800. Well, they won't deduct the $800 minimum tax. So you would basically receive the refund and then pay your minimum tax.
Okay. So regardless, they're going to get their $800 out of
Yeah.
your pocket.
Yeah.
It just doesn't matter.
Yeah.
Okay. Of course,
Yes,
it's the
that's
state
for
of California.
LLCs. Yes, that's for LLCs, that's for S corporations and C and regular corporations. So
Okay.
that California does impose that. And that's what's driving a lot of kind of some business has exodus out of California because
Yes.
of this, because of their tax-heavy structure. So hopefully in the near future, there's some tax reform that is needed on the business side, because California is a very expensive state to do business in.
Yeah, I actually I have someone that I'm talking to for the event that might come down here, one of our state representatives, and someone from their office called me the other day to find out more information. They heard about the event and said they wanted to come, and we were talking about that, just a little bit about the fee, and they're trying to see how can they get to be done away with that, because they're losing so many businesses. People are going to Nevada and different states because of that fee, and they're losing out because of it. So I think I personally think, he didn't confirm that they are or are not, but I think that they're going to end up working that out, because that is, that
Yeah, because you figure if
$100
you're
and
just starting out, and a lot of people, that's a very big strain on
yes.
individuals, especially when they don't know about it. And that's where I get a lot of clients who have incorporated already and really didn't think about what business form they wanted to go into, and
Mhm.
really incorporated too early in their business process, because that is, it's not really necessary to incorporate right away, depending on what you're doing and who
Mhm.
you're doing it with. And it's a very wide misconception that if I'm doing business, I have to incorporate right away. And
Right.
that's not the case at all, because there are expenses that come around with certain form or entity choices. And it's very heartbreaking for those who do incorporate in the LLC or corporate form, and they get hit with an expected minimum tax.
Okay. And there's a friend of mine. She did a nonprofit, and she was able to get it done in about 2 months. It was like a short form, something like that. Are you familiar with that particular way of going nonprofit? I think you can't make more than 50 grand. I don't know if it's a year or over a 3-year process. Are
Mhm.
you familiar with that?
I am, yes. They actually initiated that process the last year.
Okay.
Um, it's called the 990 EZ, and
Okay.
if you take in, you have to be a public charity. You can't be a private foundation. That's one of the rules. And if you take in under $50,000 in contributions over a 2-year period, then you're eligible to form your nonprofit in that manner. But you first have to incorporate in your state before you can file the 990 EZ.
Okay.
So
Okay.
it's real easy. It's I believe 2 or 3 pages. You can do it online. It's a fully digital process, unlike the 990, which is not. It's like 20, I think 30 pages. The regular 990 is. So it saves a whole bunch of time. So I definitely recommend that process if you're starting out, before you get the corporate partnership and the
Right.
money rolling in for your nonprofit. Definitely start it out so you can go through that easy process. And the turnaround is within like 3 weeks. You get your nonprofit letter.
Oh wow. My friend, she did hers. I thought it was 2 months. but she did do it pretty quick. She did it about October, November. I know she was trying to get some things together to get it started, and then she found out about that and she jumped on it. Now she has a nonprofit status, which is something that I want to do because of me wanting to go around and be able to help people with to speak on domestic violence and see what I can do to get grants and things like that to help some of these shelters. But that's something that you and I can talk about further, and maybe you can help guide me with it, with exactly what to do. But nonprofit wasn't even in my view until I found out how quick the process was. And now that I'm hearing about it, I'm spreading the word. People are like, well, what do you need to do? Well, I don't know. So I know to send them to you. So now that they can call you, actually, I'm going to have a lady call you that's trying to get her nonprofit status, and then maybe you can help her out.
Awesome. Yeah,
So,
it's real easy. Just be in mind that there is a $400 fee that
yes.
goes to the IRS for that 990 easy, and the regular 990 is $700 for the initial application fee. So it's definitely a great thing and has inspired those who do have nonprofit passion to go forward with their mission. So I'm excited about it.
Yes, yes. Well, why don't you do this? Let us know. We're running out of time. Why don't you tell us some other things, maybe that if there's some more things that you do that you haven't mentioned, if you do help people form their LLCs or their business entities, tax information since it's tax season. Oh, wait, before I let you go. As a self-employed individual, I only file my taxes once a year, which is, before the 15th. Do you have any recommendations? Should we be doing something quarterly, or is there some records, a certain way we should be keeping records in order for us to make sure that when we come to you, we're completely ready and we can just hand you the information? What is some information you can give us on how to properly prepare instead of being like me, where I just throw everything I do, I just throw everything in an envelope, and this lady that I had been going to, I just give it to her and put it on Excel spreadsheet and call it a day. What are some recommendations you can give?
My recommendations are, basically tracking your income and expenses. If you're doing things for any businesses or other people where they might issue you a 1099, making sure that you've collected all those 1099s or documented income that might come through for you, having that in order. And as for your expenses, if you don't have the Excel spreadsheet, again, I praise the debit card. Because you can extract that data from your online banking system right into Excel and sort it so you can categorize it into the different expenses that you may have incurred for the year. So Excel is also good if you're not using QuickBooks. QuickBooks Online, I'm a fan of that. It starts at $12 a month. And you can integrate it with your online banking and categorize expenses. It depends on what you're doing. Going through and categorizing your expenses on a quarterly basis, for the real organized monthly. So that's a good tool to use if you have some transaction volume. You definitely want to keep on top of it during the year and not let it wait till the end of the year to go through it all. So my best recommendation is QuickBooks Online integrated with your bank account, so that way you can organize as you go along during the year.
Okay. And should we be filing every 3 months or something, or that's not necessary?
That depends on your tax liability. And the tax law is if you expect to owe over $1,000 in the tax year, you should be paying quarterly taxes. And if you don't pay quarterly taxes, they will assess a penalty on you. So if you file your return as a sole proprietor or private contractor and your balance is over $1,000 and you haven't paid quarterly taxes, they will assess, you will get a penalty for that. So it all depends what your expected liability is for each year.
Okay.
So it's always good to get with your accountant or CPA so they can kind of forecast for you and advise if you need to make quarterly payments.
Okay, and that's why I tell people, talk to the professional. I used to do my taxes until I became self-employed, and I wasn't even trying to do that. The W-2 thing was so easy for me to just jump online and do it. But when I became self-employed, I found how important it was to talk to a CPA. And I think most people should do that anyway, because you probably miss out on so many different things that you don't know about because you're just clicking, 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 trying to see if that number tallies at the top and how much you're going to get. Because I did that. I know I'm a
Right.
victim, not a victim of it, but that's something that I did. Just trying to see how much money it can come and get back this year.
Right.
So talk to the professional, and that's what Ronique is here for. So I wanted to go ahead and before we end, I want you to, again, if there's something else that we don't know about you, what you can do to help others, and through your business, let them know, and then also how they can get in contact with you, whether telephone number, email, social media accounts, however, how do we get in contact with Ronique?
Okay. Well, I am all about small business. Small, I say medium size to small, individual, whatever you have going on, whatever your accounting needs are, I do it pretty much all. Me and my two associates, we can handle all your business needs, whether it be invoicing, payroll, profit planning, price pointing, because especially with my clients that do merchandising, knowing your price point, knowing what to sell, what you're selling for in order to make the income that you want, or whether you're selling at a competitive rate. Those kind of market analysis, we do that for merchandisers and people who sell different goods and things of that nature. You can always reach me at Executive Touch at 909-276-7192, or email me at rchambers@etouchaccounting.com, or visit the website at etouchaccounting.com. We're on Twitter at _touch accounting, and on Facebook at Executive Touch.
All right, perfect. Thank you again so much for being a guest on my show. And for those that are watching, don't forget February 21st, you'll get to meet Ronique up close and personal. She'll be talking and getting in more depth and more detail about the business entities. I had someone that actually contacted me that wanted to come because she said she wanted to understand that a little more so she can file properly. It's important that we get ourselves together. When we're in business for ourselves, don't try to do everything, because it's going to be hard for you to build what it is that you have out there. For me, I can't do the accounting part if I'm trying to build my business, my real estate business, but I can assist by making sure that my stuff is in order. Make sure you talk to a professional, and if it's not Ronique, talk to somebody, so that way you can have all of your business, I don't know the wording I'm trying to say, but your business things intact. I don't want to use the word things. I'm in Toastmasters, trying to use better words. But you want to make sure your business is intact. Also, if you want to attend the event, it is February 21st, 2014. It's going to be in 2015. Sorry, it's going to be an awesome, awesome event. I'm really excited because we'll also have people talking about marketing, social media marketing, how to build business credit. We're going to be networking. Food is going to be provided. Hot food. I have to keep repeating about hot food because I'm a fan of sandwiches, but when I'm having a long day, I like to eat something nice and hot. So the event is from 10 to 3, and again, it's the Entrepreneur Empowerment Conference getting put on here in the lovely Moreno Valley, California. Okay, if you want to follow Comma, you can follow Comma at Comma Speaks. I am on Facebook, Instagram, Twitter, Pinterest under Comma Speaks, as well as LinkedIn. I'm also on, of course, YouTube, which you can actually click subscribe because you're watching me more than likely on YouTube, or you can add me to your circle on Google Plus because you're watching it on either one. Thank you so much for watching. Again, Ronique, I appreciate you for being on. I appreciate all of your knowledge. Very knowledgeable, and that's very important to me. Thank you for being a guest at my event. And for those that are watching, remember, no matter what you do in life, always pursue your passion.